everyone, welcome to Startup Street. I'm Ritu Singh, and with me are Arundhati Ramanan and Shruti Mishra from the Mumbai studio. Here are the key headlines from the startup world. EdTech firm Educational Initiatives has acquired Open Door Education, which is a learning platform known for its thinking-focused approach for an undisclosed amount. The strategic move will bring Open Door Education Technologies tool and school network into the EI fold, as the latter aims to enhance learning outcomes for K-12 students across India and overseas.
Inframarket has raised nearly 732 crore rupees in Series G funding round led by Silver Line Homes with participation from Tiger Global, NK Square Axle India, Nexus Ventures and Evolvence India. The company is preparing to file its DRHP with SEBI.
Google has selected 20 AI startups in India for its accelerator program, focusing on healthcare, finance, climate, and education. These companies are developing agentic multimodal and foundational AI models. Google will provide support through Google Cloud infrastructure, Gemini models, technical mentorship, and go-to strategies.
Donald Trump and Xi Jinping are scheduled to speak today as Washington and Beijing try to finalize a deal to keep TikTok operating in the United States. The talks could be a precursor to a potential in-person meeting later this year.
And Apple's new iPhone 17 goes on sale. Thousands throng Apple stores across the world. A scuffle breaks out at the Mumbai Apple store. The starting price of the iPhone 17 in India is 83,000 rupees. All right, so those are the headlines that we're tracking for you today. But in what's brewing, climate tech startup Equilibrium has secured $3 million in a seed funding round from Kalaari Capital, Peak 15 Partners and Avaana Capital. Equilibrium integrates carbon science, digital monitoring and community-driven execution to deliver high-quality, verifiable carbon removals that build climate resilience in India's food systems. This fundraise is going to support the expansion of 8 pipeline projects across 9 Indian states that will cover 120,000 hectares of land and engage over 150,000 smallholder farmers. Collectively, these are expected to generate more than 20 million tons of high-quality carbon removal. But for more on the funding and the company's plans ahead, joining me now is Siddhant Jayaram, the founder of Equilibrium. Siddhant, welcome to Startup Street. Thanks very much for being with us here. Briefly start by telling us about the company. You partner with farmers, as we understand, to fight climate change, creating new income streams through verified carbon removal projects. What are the biggest challenges in getting farmer participation at scale as well, and how do you plan to sustain this?
Yeah, no, thanks, firstly, for having me here. And yeah, regarding the company, we generate high quality carbon removal credits, right? What does that mean, essentially, right? We work with farmers who essentially have barren land or land where they're producing today, and we make them transition into climate resilient agriculture. And when they transition to climate resilient agriculture, they're also either reducing or removing greenhouse gas emissions or carbon from the atmosphere. And for the greenhouse gas emissions that they're reducing or removing, they end up earning what we call as carbon credits or carbon removal units, right? And these units are then purchased by companies, organizations, and, in some cases, even governments that have net zero targets, right? There are lots of big tech companies, big oil companies, and even the Singapore government that today has net zero targets, and they're the ones procuring these credits from organizations like ours. So broadly, in terms of how we work with farmers, we work with, a lot of existing infrastructure. So there are NGOs, FPOs, and other farmer-facing organizations that already have trusted relationships with smallholder farmers. We work with these intermediaries and organizations to tell them or to provide them best practices to convert these land areas into, climate agriculture or carbon removal sinks, whether it is transitioning to agriculture that is organic, whether it is to move towards agroforestry practices, or implement products like biochar that improves the carbon content in the soil. So we have a plethora of solutions that we offer to smallholder farmers. And, they not only improve or enrich their soils, but they also earn an additional revenue stream in the form of carbon revenue.
All right. Your portfolio spans agroforestry, regenerative agriculture, mangroves, biochar. Which of these pathways is showing the most traction, and which do you expect will drive the largest impact in the next 5 years?
Yeah, I mean, in terms of, the amount of carbon sequestered or carbon removed, agroforestry definitely seems the most promising. But in terms of the number of farmers that is being or that we are impacting, regenerative agriculture will continue to be the largest driver of, growth / amount of impact that we're having. With that being said, each one of these solutions bring their own strengths, right? Mangroves helps, local communities in the region, not only as an income stream, but also with climate change. There are lots of cyclones, for example, in the Sundarbans that really affect these tribal communities. So it's important to understand that, when we're building these critical infrastructure, we're not only sort of adding a revenue stream, but we're protecting them from the perils of climate change itself. So each of them bring their own unique perspectives. But in terms of scale and impact, this is the order that will follow.
Okay. Got that. Siddhant, now that you've got this $3 million check, tell us what the priorities are in terms of deployment.
Yeah, so priorities are to continue to scale these projects, right? So we started them with some initial amounts of capital that we ended up financing from our balance sheet. So parts of the scaling up is also now a critical area where we will end up investing some of this capital. Outside of that, we'll continue to build our technology stack where we measure and monitor all of these carbon removal solutions. Outside of that, we're continuing to build a world-class science team, operations team, and technology team. So parts of this capital will be used to continue to build a team that can deliver on our ambitious climate goals.
Siddhant, since you're a young company, if you could give us a sense of how fast the company is growing, if you could put some financials, some numbers to it, what kind of revenues and scale have you already achieved, and what is the sort of outlook you have over the coming few years as you continue to grow?
I mean, we're honestly a very young company, started a couple of quarters ago, but in the next 12 months, we'd expect to sort of be north of a couple of $1 million in revenue. Probably, I know it's a lower base, but we'll end up growing probably 15 or 18 times from the last fiscal year in the next 2 quarters, which will be the end of FY 25-26. With that being said, in terms of growth over the next 2 years, we do expect a lot of companies, a lot of organizations to continue to ramp up their carbon credit purchases and carbon finance and enable the carbon finance industry. So, we only see positive growth in this segment. 2030 is when most of these organizations have interim goals. So in the next 3-4 years, we expect this to sort of translate into potential revenue into our organization.
Got that, Siddhant. Thank you so much for sharing your thoughts with us, and we wish you the best with this venture. It's been a pleasure speaking with you. Thank you.
Likewise.
And moving on, Evolute IQ has raised $53 million in a minority growth capital round led by global private investment firm Baird Capital. The fresh funding will give the Bengaluru-founded startup the firepower to supercharge its international expansion, deepen investments in its India R&D center, and cement its leadership in agentic AI-powered automation. Founded in 2019 by a group of tech visionaries, Evolute IQ has built a platform that redefines how enterprises automate complex business processes across industries like like banking, insurance, healthcare, and telecom. With recognition from Gartner, Everest, and IDC already under its belt, the company is now looking to scale globally, hire top talent in India, and make strategic acquisitions as it ushers in the next phase of AI-led transformation. Joining me now to discuss this further, Sumit Gupte, the co-founder and CEO of Evoluteiq. Sumit, thank you so much for joining us on the show today. And before we get into the fundraise, if you could sort of take us through the kind of growth Evoluteiq has already seen, and in what way does Evoluteiq's agentic AI platform go beyond traditional automation solutions in the enterprise space?
Yeah, so let me first start with the right name. We are Evolute IQ and not Evoluteiq. So just want to go on record. But we've had a phenomenal journey from the beginning. We started back in 2019. And, our whole ethos and philosophy was that we wanted to focus on the problem rather than parts of the problem. So if you look at any organization, any global organization that has been consistently delivering successful outcomes, whether it's a bank or it's a courier service or it's an airline company, the one thing common between all of these organizations is they have good, consistent processes that allow to create the right outcomes. And so myself, Deepak, Sanjay, Naveen, and Arun, when we got together, our thought was that, hey, why don't we build a technology that sort of underpins all of this and solves the problem for the entire process rather than pieces of it. And most importantly, build a technology that can think for itself, that can be autonomous, that can learn, basically, essentially do whatever a human can do, but better and consistent, right? And I think that's sort of what we started with as a concept. We've built on the technology and we continue to scale. And it's been a phenomenal 6 years that we have put together and, love the team. We sit here today with significant growth as well as, scaling globally.
All right. Just to point, Evolute IQ, I said IX by mistake, but you have raised $53 million in funding. So how will these funds sort of help Evolute IQ fast track its big global expansion plan? Could you take us through how you plan to use these funds that you've raised?
Yeah, I think we are an innovation company, right? So the heart of it is the technology. That's our central nervous system. And we have been ahead of what most of our peers have been doing. So while people have been focusing on one part of it, we have always looked at the entire end-to-end. And we will continue to do that, right? So we are moving towards what we call the vision of singularity over the next few years. And so a big chunk of the investment will be towards the continuous innovation. The second big chunk of the investment is going to be scaling our operations globally. So we are headquartered out of Stockholm. We continue to scale in the US, which is one of our largest markets. And then India is obviously a very, very strong pillar of growth for us, especially with the GCCs. And then, a big chunk of our R&D talent sits out of Bangalore. And that's sort of, a big hub for us to invest in terms of talent and also in terms of operations.
I was going to come to the India plans in just a bit, but if you could take us through your current, client list and which industries, because you cater from banking, insurance, healthcare, there are so many industries you cater to, are likely to see the biggest transformation from this technology?
You're talking to a bunch of engineers and innovators, right? So we build technology that can solve the problem. And I think over a period of time, what we have seen is our biggest customers have been Fortune 500 customers, and most of them have been in the healthcare and the banking and financial services sector. We have seen a sudden surge in the insurance sector as well. So those are sort of the three key industries that are scaling now. And, we all know, right, the GCCs are sort of becoming the core of a lot of innovation, especially around the AI space, which is what we are, a core native AI platform. And what we see is, India taking sort of the pole position in terms of some of these core innovations with our customers who have opened up the GCCs. So it's not just an innovation center for us, but it is also a build and a scale center in terms of, operations and business.
Sure. And if you could, take us through the kind of revenues that you're currently clocking, where do you hope to end this year and what's profitability looking like?
So, it's public news, right? We have always been EBITDA positive and we continue to scale. So I think that's been a very core part of how we have built the company and sort of the philosophy of the founders. The more important thing is, we have been doubling on our license subscriptions ever since we started. Our CAGR on the license subscriptions has been north of 100%. We don't see any reason for that to slow down. In fact, post this with the investments in sales and marketing, we do expect that to actually grow even more. And so, that's sort of the track we are looking at, the trajectory we are looking at. And, with Baird Capital, investing and with them bringing in their balance sheet and the scale and size and sort of the access that they have, especially in the healthcare and the financial services space, I'm fairly confident that we will blow the numbers out over the next few years.
Sure, you'll blow the numbers out over the next few years. But if you could quickly let me know, currently most of the growth is coming from US and UK, right? If you could take us through where India stands and what Evolute IQ's India plan is, how do you see the revenue mix changing in the next few years, if you do?
I think if you look at the global spread of our revenue, US obviously is the largest market, followed by UK and Europe. But the acceleration that India is showing in terms of using the technology and the adoption, because even if our clients are headquartered in the US or the UK, they have significantly large development centers or GCCs or their own subsidiaries out of India. And we have seen that piece of the of the business starting to scale very, very significantly. I mean, if I have to talk numbers, I expect India to be like growing 300-400% out of the entire portfolio over the next 2 to 3 years.
So big growth there that you envision for the India market. All right, Samit, thank you so much for taking time out and being here on Startup Street. And we wish you all the best going forward.
Thank you so much. Thanks for having me.
Well, on that note, it's time for us to head into a short break. But coming up, BlackRock-backed Minute Media makes a big play in India, acquiring AI startup VideoVerse, a company known for using cutting-edge technology to automatically extract and package sports highlights. What does this deal mean for the global sports content game? We find out on the other side. Stay tuned. Welcome back to Startup Street. Global technology and sports content company Minute Media, the name behind Sports Illustrated and the Players Tribune, has acquired India-born AI sports video platform VideoVerse. Now, VideoVerse's flagship product, Magnify, powers instant highlights and short-form video for FIFA Plus, ISL, Willow TV, and more. With this deal, Minute Media says it's creating a full-stack solution from creation to distribution to monetization, while also expanding its AI footprint in India. Joining Joining me now are Asaf Peled, founder and CEO Minute Media, and Vinayak Srivastav, the co-founder and CEO of VideoVerse. Gentlemen, welcome to Startup Street. Asaf, let me start with you. If you could first give us a sense of the deal size and confirm if this is a 100% acquisition. Also, Minute Media already has a strong global presence in sports and content. So why was VideoVerse the right fit to acquire at this point?
Hello, Shruti. Thank you for having me. It is indeed a 100% acquisition. So we own the entire company, VideoVerse. I cannot expose or share the exact number, but you may assume that it's a substantial deal, hundreds of millions of dollars of enterprise value.
Okay.
And obviously, Minute Media is quite global, but that's a key entry into the strategic market of India for us.
Sure. And why VideoVerse?
Sure. So as you've indicated, we are a global sports tech and content company. And for us going forward, one of the key areas of focus is working with global leagues, teams on the areas of AI and video, and looking at a few leading global companies in that space. We figured that VideoVerse is really the best target with the best tech platform and the best cultural fit for us, for Minute Media, to grow together over the next few years.
All right, let me go across to Vinayak here. Vinayak, you've built Magnify into a platform used by FIFA Plus, ISL, and VideoTV and the likes. What convinced you that Minute Media was the right partner for the next stage of growth? And what is the big impact you want to create now together?
Thank you so much for having us on the show. I think my personal belief has always been that AI-driven video technology has the power to transform sports content. To fully unlock the scale of that vision, we needed a partner with global reach, distribution, and a complementary culture of innovation. Minute Media was exactly the natural choice that we ended up finding eventually. Together, we're creating something very unique, a true end-to-end ecosystem where technology and media converge together. The big impact we want to make now is to redefine how sports content is created, distributed, and monetized worldwide, delivering more value for sports content owners and more magic for sports fans everywhere.
All right. Asaf, like I mentioned earlier in my introduction, you now want to offer a full stack solution, creation, distribution, and monetization. So tell us, Asaf, how will this change the value proposition for leagues and federations that you work with?
VideoVerse acquisition, we've already been working with top leagues around the world, predominantly in the US, like NBA and NFL and MLB, where we have distinct and unique distribution agreements where we can essentially distribute and monetize those league highlights. But one area where we are significantly lacking is on the AI-driven video content creation. And that's really what VideoVerse brings to the table. So now when we target a global or a local league, we have the full scope of creation, distribution, monetization. And we feel that no other company in that space globally can come up with that end-to-end offering.
All right. Picking up from what Asaf just mentioned, Vinayak, Magnify is known for its AI-led capabilities, real-time highlights, multilingual subtitling, automated workflows. What new innovations are you now doubling down on post this acquisition?
I think we've only scratched the surface of what AI can do for sports content. We are working on exploring AI capabilities in multilingual expansion 2.0 to go beyond subtitling and localized storytelling for global audiences. We're getting into interactive fan feeds where AI builds dynamic highlight feed fans, and fans can interact with their content. Example, they can choose their own perspective, their favorite player, follow the view of the ball, everything that a fan would want to do as they would be in the stadium. And then goes the monetization intelligence, where AI identifies high-value clips in real time, sponsorship, hotspots, viral moments, and suggests monetization routes instantly. I think our mission for Magnify evolve into a global sports storytelling platform that is personalized and immersive has just begun. And I think we're unlocking experiences and revenue models for partners.
Sure. Asaf, let me now talk about the India market. With Minute Media spanning 14 global markets, where does India fit into your AI and technology roadmap now that VideoVerse is part of the family?
So India has been a key strategic driver of that transaction. By the way, Shruti, I personally have lived and worked in India in the past, so there is a personal element there as well.
Okay.
No secret that India is just the largest market in the world in terms of population, sports fanship, and also in terms of technology excellence. We focus on video and AI technology. So looking at our global tech and development presence in AI, India is now becoming a huge component. Obviously, it's a large addressable market. Looking into sports, it's the home of cricket, and so on and so forth. So there are many drivers behind it.
All right. Vinayak, you've literally scaled VideoVerse with backing from marquee investors and taken deep tech from India to the world. What's the growth plan ahead, both in terms of geographical expansion and revenue targets?
I think we've been very lucky to partner with some of the best investors and also team members, right? Like my entire team from people like Meghna Krishnan, Ritu, Prateek, Nitesh, Rohan, Om, Vivek. There's a bunch of people that I can keep naming that have contributed to the success and where we are in the journey. We have had really great investors and partners and advisors backing us through the journey, whether the likes of Moneta Ventures, Bluestone, Audacity, 9 Unicorns, Evolvence India, and many more. We've been blessed to have the right set of people around us, the advisors like Maker Group, the SKS Group, and a bunch of people that have just supported us through the journey. I think with our merger into Minute Media, we're entering the next phase of growth. Geographically, our focus is to double down on the US, EMEA markets, where we're already working with top leagues and publishers, while also expanding deeper into Asia Pacific. And I think where demand for scalable video solutions is growing fast, is just a global one on all sides. On the revenue side, the ambition is very clear. We want to accelerate growth by combining VideoVerse's AI-led technology with Minute Media's global distribution and commercial scale. I think together we are definitely building towards a business that grows top line revenue, but also grows it sustainably over a period of time.
All right, one final question I want to ask. Asaf, sports media is a fiercely competitive space with tech giants also investing heavily in AI-led video now. How do you plan to stay ahead of the curve? If you could answer it like 20 seconds.
Definitely. So I would say tech-driven platforms focus on AI, entrepreneurial energy and passion like the one that Vinayak and we bring to the table, and global footprint. That's the recipe going forward.
All right. On that note, it's time for me to wrap up this conversation. Many thanks, Asaf and Vinayak, for joining us on Startup Street, and wish you the very best with this collaboration.
Thank you so much.
It is Friday and it's time to look at all the deals from the startup world. This week saw 22 startups secure around $300 million as per Venture Intelligence. Some of the notable deals include construction's materials marketplace Infra.Market, securing over $54 million from names like Tiger Global, Accel India, Evolvence, and Nexus Venture Partners. And business automation startup Evolute IQ bagged $53 million, while B2B credit infra market platform Finbox landed an investment worth $40 million. Wealth management player Incred Money raised $30 million from Mankind Family Office, MMG Family Office, and others. And digital lending platform Finable received $29 million. So far this year, over 650 startups raised around $6 billion.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side.